Hi everyone, are you all doing? Hoping well. Welcome to my video. It's time for me to analyze another stock. This time it's going to be Microsoft. And before I jump into my own fundamental analysis, as you might know, I recently created a new playlist here on my YouTube channel where I'm creating a portfolio, investment portfolio from scratch, literally from zero, and I'm being fully transparent about it. Every time I make an update, I don't want those videos to be super long showing which stocks I'm buying or not, so I'm making these separate videos where I do my own fundamental analysis of specific companies. All the videos that you might see here separately, that doesn't necessarily mean that I'm investing directly, so consider watching my public investment portfolio videos updates to see in which ones I am investing, because sometimes I do some analysis of some companies that I might think they are undervalued, or I just want to see how their financial situation is going, and they might be overvalued, but since I already did the research anyway, I might just share it, and one day later I can rewatch these videos instead of just looking at some Excel spreadsheets. Having that said, everything that I say in these videos is not financial advice. Take everything that I say with a grain of salt. Just don't invest your money just because you see a random YouTube guy here talking about stocks. I have my own opinion, I make my own assumptions, and your returns might be different from me. We are in different situations, so just be always really judgmental of things that you watch online, including my YouTube videos. Having that said, let's jump into my laptop. I want these videos also to be quick. Tell me in the comments if you think I speak too fast, because some friends have been telling me that lately, so I'll try to slow down things here and there. So Microsoft recently has beaten their earning expectations. This is a beast company, one of the biggest in the world. All of my friends in their professions use products of Microsoft, so it's a company that is really entrenched into our lives. I don't view this company as a company that would simply go bust. I think they have a huge moat. We can see here their performance over, let's put here, in some months, so just to have some perspective. So if you've been an early investor of Microsoft, you're doing really well. I'll just put this on a more micro level. Lately they've beaten their earnings and their stock is trading around $300-ish dollars. Also, I want to say something very particular about my public investment portfolio. I am still in the beginning. This is going to be like the second month, and I want to have a large distributed or diversified foundation beginning. That's why you see a large chunk of my 40 monthly euros that I invest going to ETFs. So 50% is going to an S&P 500 ETF, so it's being distributed across the 500 largest US companies. And there's another ETF called the iShares S&P 500 Information Technology Sector ETF. Is an accumulating ETF. I already talked about this, I already made a video about this, and this is a more focused ETF. So even if I think Microsoft is a good or a decent buy, I won't feel as inclined to purchase it, because if you can see the distribution of this ETF, and remember 25% of my funds is going to these ETFs, you can see that the main holding of these investment assets is Apple, and it's not only for Microsoft, Apple as well. I don't view this as such a good pick for me, because in that ETF there's a huge concentration. 18% is on Microsoft, and 24%, almost 25%, is allocated to Apple and Microsoft. So let's say I invest 40 euros per month, and 25 is going for that ETF, and since it's 18.35, or let's make it 18%. So of those 40 euros, 1.8 euros is going directly for Microsoft, even though you don't see me directly investing on Microsoft. I just wanted to point that out. It might help some people, and I always like to explain this kind of thing. So let's jump into my Excel spreadsheet. And you can see here Microsoft, a beast of a company. The revenue in the past 5 years has been growing, and there's this misconception, I think. It's not misconception, it's actually true. The bigger a company is, the harder it is for it to grow, which is kind of true, but at the same time Microsoft and Apple have kind of proven otherwise. You can always change your business model, maybe change to some subscription based products instead of selling, being more dependent on hardware sales and other stuff. So always I don't view these as, oh, these are giants, won't grow as much as smaller companies. Of course, if you invest at a smaller company, there is a higher chance that the revenue of that company is going to double or triple in the next coming years, when the revenue of these companies is already 168 billion. That's going to be a bit tough to double in a short amount of time. Everything that said, they've been growing really fast. You can see here a 17% on average on the past 5 years of revenue growth. That's crazy. Their net income margins, their average is around 27%. And I use this revenue forecast from Yahoo Finance, so you can check those. Those are the predictions for this year, 2022 and 2023. And as always, I'm going to assume a 10% rate of return and the perpetual growth of 2.8%. 10% rate of return because that's what you normally get from being invested in the S&P 500. At least that's been the historical average. That doesn't necessarily mean it's going to be this type of returns for the next, I don't know, 50 years, 20 years. I cannot predict the future, but in my investment forecast, I always require at least 10% return to be worth my money. Also, I'm putting for the normal case, I always calculate 3 scenarios: normal case, bull case, and bear case. Bull case optimistic, bear case pessimistic. Normal case scenario, I'm assuming a growth of 13% from 2024 to 2026 and a 9% growth from 2027 to 2029. You can see that the growth has been 17% on average, so it's a bit lower. But as companies get bigger, it's harder to grow, even though in the past few years, maybe because of the pandemic, some technology companies have benefited more, but we don't know. I always like to be a bit conservative, and I'm putting a net income margin of 27%, which is around the average, because I think these companies, with economies of scale and as their business gets more dependent on subscription and services, I think it's easier to maintain these types of margins. And since people are really dependent on these problems, at least from my circle of known people, their total shares outstanding, I'm putting here the same for every scenario. I'm not diminishing the shares. You can see here, this is what investors like to see. The amount of shares of the company is decreasing. They are always buying back their shares, so you're owning essentially a bigger portion of the business. So we get a fair value of $198, so 200, give it or take. Right now the company is at 300. So right now I do think Microsoft is overvalued. I'm not directly investing in it, but this is a bit worrisome for me, at least because in my ETF, that large 25%, a big chunk is going to this company. And the same could be said, I haven't analyzed Apple, but I think it's going to be around the same thing. So for my bull case, I'm putting 16% and 12%, not even against the margin. So maybe I'm being a bit conservative, and I'm increasing their margin to 29% because in the past years they've been above 30 all day long or all year long, and their fair value is 242 in my most optimistic scenario. So we kind of need this to drop more or less like another 20% in order for me to be looking at this stock. And this would only be for my optimistic case, which is something I don't like to see. I think there are better picks out there. It's still an amazing company, and if they continue to beat expectations, I guess this kind of analysis is pointless, because you always need to make assumptions for the future. And of course, in my worst case scenario, I only put a 9% growth and a 6% growth and a net income margin of 25%. I don't think this scenario will play out, but you gotta try to at least try to calculate the worst case scenario. I mean, we never know. It's 157, but I'm not really paying attention for this value. Actually, I put here only for the bull case scenario because this is the most likely that I think. So yeah, that's it for Microsoft. Maybe you can tell me in the comments if you have a different view of this company. Maybe I'm being too harsh. Maybe I'm being too nice, but this is what's fun about investing. We all make our assumptions, and eventually, like in the future, I'll know if they are correct or not. Thank you all for watching, and I'll see you in the next video. Bye.